Do you want to trade bigger without the fear of over-leveraging? You need to understand Forex order flow analysis. Do you want to time your trades better so you don't miss the move or you get in too early? You need to learn Forex order flow analysis. If you want to trade with the big institutions and make sure the market's behind you, you need Forex order flow analysis. When you understand Forex order flow analysis, it's better than having lady luck on your side. Yeah, it's that good. Make sure you stay tuned to the end because we're going to talk about some things that can really add to your trading edge. So like, subscribe, and share this video. And as always, it's time to get our minds into the trade.
At the start of the day, all the banks in the world are party to the same information. It's a question of whether you make the best use of the information during the day. Doesn't look like there's much of a trend at the moment, so as I say, we'll just play the market on people's positions, really, and take a bit of profit out of it.
That still means bashing the pound this morning.
49.54.
In London, Richard quotes a competitive price to tempt William into buying. And William falls for it, buying £5 million.
Lose 5.
5 million of Barclays pounds have just travelled to chemical Hong Kong. As Richard sells more, the price falls. And within 10 minutes, it's down ½ a cent. The £5 million that William bought is now worth £20,000 less. In this small duel, Richard has scored. William is gracious in recognising a competitor's skill.
Well, it's a good deal. This moment is quite good.
Why do you say that?
Well, sometimes you can see his scream. He can lead the market.
Okay, pro retail traders and aspiring pro retail traders. So the last time we spoke, we had talked about the topic of order flow. Depending on which video you saw last and depending on when you're seeing this video, that's what we spoke about. So today I want to bring up what we had spoke about and how I'm going to add another element to your order flow or Forex order flow analysis. This is going to help you trade with edge if you're not already. And if you are, this is going to sharpen your edge when trading. So just for a small recap, last time we spoke about volume at time. Basically the vertical histogram bar here, and we spoke about volume over volatility, which is also a vertical histogram, but it ebbs upwards and it is determined by up waves and down waves based on the amount of volatility that takes place. And what we're going to talk about today is not only important, but being able to discern what's happening inside of these bars, because these are very powerful indicators. But one weakness, if you will, or one area of vulnerability that these two indicators don't show you. For example, this bar right here, this bar, red bar on this up bar, we have no idea how much of buying or selling took place at this time period. We just know that the amount of volume activity transactions that took place were more than any bar previous to it. As you can see here, there's nothing higher going backwards. But we don't know if there's more sellers coming in, if there's more buyers coming in aggressively, and if that's limit orders being put in, which are depressing the price during this candle that you can get from this price action. You can see price closed off its highs, almost down somewhere in the 50% range. So what we're going to be talking about today is net delta. The delta is how many aggressive buyers there are over how many aggressive sellers, or how many aggressive sellers there are over aggressive buyers, or if it's equal, neutral, equal delta, 0. And we're going to look at what that looks like on a different particular chart. So we'll head over that now. Here we have a chart. Most people commonly refer to this as a footprint chart or a cluster chart. They normally go by those two names. There may be other names, has something to do with marketing, but those two names are the more common names. So now what I want you to look at is, I really want you to focus on this right here. You know, this whole this sub window where you see the red and blue bars and there's numbers. This represents what I was speaking about before, the net delta. The blue represents buying, the red represents selling, and as you can see, there's a negative number associated with the red and a positive number associated with the blue. And that's just basically selling pressure, you know, bringing it down. So I guess negative, it's going down, and buying is positive number, so they associate that with a positive number going up. The way that I have my chart set up is quite different than you may see other charts set up. So a lot of times you see charts where there's an imbalance profile. So if we look here, this is what it will look like, and you can play with the settings to make the entire background red or green depending on the actual color you want, but I just use a line, as you can see. So it's a green line for when it goes up, it's a red line for when it's a down candle, and that's it. But as you can see, the numbers are on each side. So you have the bid over here at 39, and you have the ask here, 31. So when the ask was at this price, it was 31, and when the bid was at this price, it was 39. That's how many transactions took place. So it allows you to know where sellers and buyers are engaging, and knowing how to read this will help you discern what price action is really telling you, because a lot of times limit orders are put in and you don't actually see them on histogram volume, wave volume, or even the footprint. But there is a way to use the cluster chart, footprint chart, to see the distribution of volumes along with analyzing the delta to see where limit orders are showing up and what price may do. So going back to this style of chart, which is a profile, and a lot of people have heard about market profile. I talk about market profile in a few videos, and I tell you that I think the concepts are great. I think that the concepts are actually very relatable to how the market auctions, and when you look at a chart in this particular fashion, you'll actually see that. So if you look here, you'll see this was what they call a D-shaped profile or a balanced profile. But what's important is seeing how the volumes distribute. We're watching how the market as a whole, how they're interacting at price, what's happening. And I'll show you in a minute why that's important alongside with this delta. So we're going to go back and we're going to look at this chart here, this candlestick chart, and we're going to see if delta would have given us an edge. The chart we're looking at, the instrument rather, is gold. This is actually the 15th of May, so it's last week at the time of this recording. And we're going to check out and see if we can find an edge. So we had a run up in price here, consecutive candles on a 15-minute chart. So this is a very steep run up. We don't have not one down candle in this to the upside. And then we get a little bit of a pullback, you know. And what we can see from the start of that candle, first down candle that triggers the down wave volume, is that is very lowish down volume. So it does not really threaten this. There's nothing that's make it stand out and say, hey, look at me, you know. What about when we go back up? So we head back up, and this up volume is less, but so is the amount of pips it traveled. So we wouldn't expect too much volume. And then we get choppy inside here, 14:30 or 2:30. My server time, we had the end of the pullback. So we'll look at the end of the pullback at 14:30, and we'll discern if this right here, which we can call a tight range, was able to be timed or predicted or analyzed, which is a better term, not really prediction, but analyzed to see if the buyers were giving out and if the sellers were coming in aggressively. So we'll go back to the cluster chart, the footprint chart, and we will look for 14:30, which is right here. Okay, 14:30. We have a lot of aggressive buying. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, 8, and this is also a 15-minute chart. You see where it says time frame, M15, right there. So 2 hours, from the end of this pullback, as high as it can go, it spent 2 hours aggressively buying. And it did that on decent volume. I mean, I don't have the volume showing. I can. So you can see is decent volume. And if we go back to this chart, above average, all above average, right here, remember, it resumes. So above average, all this volume, above average, and aggressive buying, but it's going nowhere. Why is that important? Well, Wyckoff, Richard DeMille Wyckoff, he was famous for multiple things, but one of the things that he put out was talking about effort and no result. So if there's a lot of effort being put in and there's no result, which in this case there's a lot of buys, but there's no result, there's no way price is moving to the upside. It's not closing anywhere near its highs. It keeps rejecting. It's rejecting. See? So all that effort, which we know is now buying effort, it's not just the attempt to move up. There's aggressive participants crossing the bid, making price move. That is one of the reasons price move are market orders. An aggressive order is what takes liquidity out of the market and propels price in that direction in which it is taking liquidity. So this is very, very important for us traders. This is something you want to pay attention to. Because if you know all those buyers up there aren't getting what they want, then you know at some point, if the sellers take over, there's going to be a lot of trapped traders. And you can expect at some point for a volatile, explosive move to the downside. Now, another thing I was talking about, the profile. I look at the profile because not only do we see that these are buy orders coming in, but we see how they're being distributed. The volumes in general, not just the buy orders, but the volumes. So let's take it one at a time. Let's blow this up a little bit. Let's get in deep here. So let's take this candle where we have 3.2 thousand transactions. That's the total volume. And we have 142 net positive delta. So this candle came up and it auctioned as a balance area. And what that means is that there was a lot of two-way auction. There were a lot of sellers meeting those buyers. There aren't just buyers taking control, taking liquidity, and moving price up. There must be limit orders in there because we have a net delta, and they must be putting orders in, stopping price from continuing up. So that's one reason you want to know that price was going back and forth at some point and filling this out in a balanced profile. There was two-way trade. And if there was two-way trade here, then this is a fair place to do business. Simple as that. It's a market profile term. It's just the auction theory says if enough participants find value, that you will get a balanced day. And that's because, or a balanced profile in this case, because it's a 15-minute cluster or candle. And we get a balanced distribution because things are changing. This is something right here where we're either gathering steam or we're losing steam. That is what a balanced profile day will do for you. It will either reaccumulate or distribute. That is what is being told to you when a balanced day happens. Now, we have to put that into context. We have an up wave coming on positive delta. And at the highs after this up wave, because if you remember, not only do you have this up wave, but after the pullback, we now have another up wave. After that up wave, near the highs, we're getting this distribution. We're getting this D profile. And on the next candle, which is still positive delta, we get another D profile at the top near the highs, and then price shoots down away from it and then shoots down again some more. That's important because we have all of this buying coming in and price cannot continue to go up, and we're seeing distribution and balanced day profiles, two-way auctioning, and then we're seeing initiative action away from it, all the while when we had an up wave to the back, impulse wave, small correction, another impulse wave that could go nowhere. And when you're looking at a regular candle chart, you see all of these wicks, and these wicks are telling you something, but a lot of people would get caught looking for the breakout. They would be thinking, oh, let's buy the breakout, okay, or it's going back up, okay, pulled back, let me buy down here. But meanwhile, they wouldn't have known without a chart like this that, well, we've been buying and buying and buying and we're not getting anywhere. And if you look at the distribution of transactions, price is being held up somehow up there and rejected. There's no close on the 15-minute chart higher than that one right there. Not at all. And that should tell you something. That should tell you that prices do not want to remain to the high side. That's your line in the sand, in other words. All right. Okay. So now let's talk about something else that this chart gives us. The ability to time the market just a little bit better. If you look right here at this cluster of volumes, this D-shaped profile, you'll notice that this was when the most negative delta, when the bids were hitting aggressively on the tape. This is where it came in, and not before this. Not before this downtrend, well, a small correction, I should say, and then this impulse back up. So all the while we were getting this absorption of the offers. Finally, we see sellers step in aggressively, not just limit orders, holding price or absorbing market orders, suppressing price on the offers. But now we see the bids, they're like, let's go. People have timed this market, or they've seen enough and they're like, let's get in. And then what happens after they get in? Well, on the next candle, because after this closes, on the next candle or cluster, you see price goes back up to test this high of where the sellers came in. It's a test to see if there's any more buyers, if there's anything significant, and it flashes down. And we get a big move after this close all the way down to about, what is this, 94.70 from 98.90, $4.20 on a ADR of, I think at the time was about $10. So you're looking at a 40% move, and you could have gotten in on that using this. And what's more of the point is that if you would have looked through here, so all these volumes before it fell off were pretty much all the same, you know, 2.8 thousand, 2.4 thousand, 3.2, 2.4, 2.7, 2.6, 3.3, and 3.1. So what gave us the inclination that this market was ready to move was the aggressive sellers coming in. And this is the information that you need in order to trade the market with edge, more edge than you may already be trading if you're not reading the tape or Forex order flow analysis. This will give you that timing. This will help you. Also, one reason why I prefer this style of chart over the imbalance footprint. So for example, if you see the traditional imbalance footprint, it looks like this. And that's okay, but can you see the same picture? Do you see the absorption at the highs? Do you see the distribution profiles as easily? No, not at all. And another reason I like the profile cluster chart or the profile footprint chart, what have you, is as you can see a lot of these imbalances on this side, a lot of the greens going up, right? A lot of these are green. But if you look at the profile, and this is the 1445 candle, if you look at the market profile, again at the 1445, you don't get as many greens. Why? Because in order for you to get an imbalance here, which I set to 300%, is you need to not only have an imbalance of either the bids to the offers or the offers to the bids, compared diagonally, but you must have also, or price, I should say, I keep saying but price must have also been dominant at that price level when it was the bid or the offer. So for example, right here, where it's 79 and 35, that's the total combined activity at those price points for this cluster. And it's an imbalance to the upside. That means the ask have more activity than their bids compared diagonally. But also, it dominated when the bid was also at this price. So the ask was still, buyers were still active at this price when the bids were also at this price, and buyers are also more active than the bids right below them compared diagonally. And that lets you know that there's a real imbalance at price and according to the bid or the ask, whichever way you're looking at it. And that will help you determine when there's more strength or weakness in the market. I like that because it's more of a filter, because you can get a lot of imbalances, but necessarily price may not be dominated by the bids or the ask at that price, just one or two prices below it, and that can be due to liquidity factors. It's something that I feel is better filtered out with this particular system or parameters. Also, getting back to looking at the shapes of the profiles, I mean, we can see low volume areas, we can see it come back, low volume areas, so we can understand where price may have to come back and auction out. Obviously, we've seen absorption. This whole entire section is absorption. This is all absorption happening up there of the offers. We know that. We see the sellers aggressively come in, moving price, taking liquidity, no longer just sitting on the orders, on the limit orders, and saying, hey, feed me, Seymour. Yeah, feed me. So that's an important concept. That's something you cannot see with just a regular chart, and something that takes place over this 2-hour period and then aggressively moves down about 52% of the ADR. That is an aggressive move. That is a line in the sand. That is something you will want to see. If price can get back to it, what will happen? Because something of that magnitude will probably continue forward. And knowing that this wasn't exhaustion, but this was absorption, then we can say that, well, there's probably no more buyers to the upside. With that move that's taken place, we need to now start looking to the downside in the coming days. But let's see how price reacts when it gets back there, if it gets back there. So we'll come back over to, let's just look at the candle chart real quick. Get rid of that line, wherever that came from, right here. Okay. Here we go. And this is the 15th. So we'll just mosey on down to, this is the 16th. And we're at the 16th. And let's actually see what happens. Let's shrink this down so we can get more chart. All right, so as you can see, this is the absorption and the move down. Price comes near the absorption, near right where it initiated. So if we look, this is the 1645 candle, 1645 candle, where the aggressive bids come in and price makes a big move to the downside, right? When it gets near that again on the next day, what does it do? It flushes down. We're talking about almost $15, 14 and a half. 14 and a half. That's the power of order flow. That's Forex order flow analysis. That is market edge. That is supply and demand. That are the things that will help you become a pro retail trader. Not just trading based off of a number, some retracement level, a crossover. Because at the end of the day, these are market mechanics, and all markets, whether the real estate, the automobiles, bonds, currencies, stocks, supply and demand rule that world. How to read it can help you increase your edge, and really you will be able to do the things that you have wanted to do in this business. It's that simple. Now let's see if price even came back to this point here. Price went down hard. I mean, if we're just looking at it from this perspective here. I mean, how far is this from? We'll go up to here when it came back to where the absorption and the initiation took place. I mean, we're talking about almost $24. Almost $24. And yes, if we go back to look at it in context, we had a high here. It peaked, right? After this run up, it peaked. And then it was dipping down. But it wasn't until we got this two-way auction with high absorption, a lot of buyers, trapped traders, and all of that money, all of that order flow never got set free. Never let any of these traders out. These guys and girls, they're stuck. And it used all of that liquidity to go for a ride. And at points, I'm sure they reaccumulated or redistributed all throughout here. And we have more ways that you can learn how to trade with edge inside these markets. This is the type of trading that we advocate here at Pro Retail Trader. We don't want you to actually feel like this is too complicated. All of these market principles, the absorption, the order flow, the initiation, the profiles, balance days, balance clusters, all of this can be added to your trading style. It will help give you an edge, like I said. We have so much more to say. This isn't it. Make sure you like, subscribe to this channel, because we're going to be bringing things like this to the trading community every week. See you soon. And remember, trade like a pro, you have to train like a pro.